jump into it. 9 o'clock. So this is the 1 hour chart that I'm watching for futures. Um, I forgot last time we checked there was a difference of about 15 points between SPX and ES. Now I forgot. I think that shrank. I think it came down to about 10 points or something. Not entirely sure, but I think that's what it has come down to now. I think contract is about to change. Not sure when. Here. So this is where the contract would change. That's March, Friday 10th March. So more 1 hour, one more month, give or take. Right. So let's start with the bigger picture here, because going on the smaller scale will not make a lot of sense today. But we'll check that one also. Basically, this is the chart, the 1 hour chart. This chart, it bounced here on the 200 moving average. This is the futures. This is where SPX also bounced, and it's been in this range, right, within this tight range since a couple of days. Now what? Uh, the reason that I'm showing this chart is that ES is getting into a squeeze here, and this is something that I don't like because this might fire up or fire down, but it will resolve one way or the other. It must resolve one way or the other. So what does this mean? The volatility which expanded here now is contracting. So basically, that's the idea here. The volatility will expand today again. Probably, I think we still have some data coming in at 10 o'clock. That might do the trick. If not, but certainly you have FOMC today at 2. That will certainly do the trick. So with that thought process, let's go here. And to the upside, well, the futures could, easily push about 3%. 3% of 47p. Let's do a quick math here. Futures are, I think, pricing in a 5% day. This is slow. Right, so let's get here. And yesterday, I don't remember where it closed, but let's get to this number. Let's say 4075 into, let's say, 3%. That will leave us about 120 roughly. So let's say 120, 130 from here on the futures will easily put it at 4200, right? So if that's the 100 moving average on the week, and that's what we are gunning for basically. If that clears, then not definitely not plotting anything above 4268. That's about close to 5%. 40 to 68 would be close to 5%. I am not really plotting in that number, but 3% very likely is about 42, give or take, on ES. So 42.5, 42.10. That makes sense. 3% move to the upside makes sense, and to the downside, again, if it starts to come down about 120 points, so that would put it at let's say right here, 38.80. No, not even 38.80. It should be somewhere about here, right about here, and the 21. 3960 to probably right about here, 3950. Right, so this is the downside projection, and the 100 moving average in the week. That's the upside projection for FOMC. Unless the market says it doesn't really care much for 25 bips, unless it's already priced in. Unless that is the case, then probably market will probably give us another 1.5% day to the close. But definitely at the release, I'm expecting a push to the upside. Then probably after once chair starts to talk, and if the chair goes hawkish, then very likely it will come back down. That's very likely the case that I am looking at. However, it doesn't matter what happens. The bigger picture is still that this line right here, the 4250 area to the upside, and this line right here, the 200 moving average to the downside. This is the range pretty much within which the game will be played, probably for the few foreseeable, next at least 3 months. So Probably, yeah, next 3 months. I think the first quarter, let's say the first quarter, this is where the game is 42.60, and to the downside about 36.80, the 200 moving average here. Unless I'm thinking if the even if the market comes down, this should act as pretty decent support, 32.70, or if that breaches, very likely it's going to come back down and test this number, 36.50. So, or if that breaks, probably the second standard deviation on the month, 36 area, 3600 area. I'm thinking that this is where the bottom is for the markets, unless Apple does something very, very weird and goes probably below that 110 threshold. Unless that's the case, I don't see SPX pushing below the 50 moving average on the month, and I think that's a bigger picture here. This thing curled up very nicely. I would have wanted it to come back down further, both of these lines to come back down before taking across the upside. Obviously, that did not happen, but that was still the expectation. Now let's look at this thing. This is still crossed to the downside. So might be a case that it actually hits right till the mean here today, 42.13. That is also in line with the 100 moving average on the week. So if and we are still discussing ES here, and you can probably take about 10 points away from ES to get to SPX number. So the mean here on the month is sitting at about 42.10, 42.15 area. So if mean gets tested today, then very likely it's going to take a breather. However, the good thing with that would be that the mean would get tested. In the next stop, we can expect it to clear probably to the upside and hit the upper inner Bollinger Band. So that's the thesis, anyways. That's the thesis. If it hits the mean, then it will go hit. Of course, not for today. Not saying that will happen today, but going forward, right? And why is that still a possibility if the mean gets tested? Anyway, the thesis says it will go test the upper inner Bollinger Band. However, we still have Apple and Amazon and other earnings. And if those earnings come in good, especially with Apple and Amazon, then very likely we'll start to push all the way here into 43.30. Not the base case, of course, not the base case still, even with Apple's earnings and all that. But that is just a thesis that if it clears the mean, and very likely it's going to go hit the upper inner Bollinger Band. That's the thesis, and that is not for today. Probably for going forward into February and March, we might witness that 4300 handle on ES, but definitely not the case for today. Uh, Probably the case for today is if the market volatility is probably that 3% shot to the upside, about 4200, 4210, and if that clears, then we'll reassess the situation. Unless I think it's going to go hit this number and start to take a breather there. Right, and now let's get into this guy, DXY. DXY, well, DXY doesn't really make sense, but here, this is the one that we want to be watching. And the DXY and the 10-year are down because of the data, right? We've been getting yesterday's data. Basically, the wage data that we got yesterday was better than expected. Was still a bit high, but it was trending in the correct direction, which is down. So what would that mean is that the wage spiral that widely was very much feared, that is not happening, right? And that is the reason very much the market reacted positive. I wasn't expecting 1.5% move yesterday. I was expecting 1%, but it did happen, 1.5%. Fair enough. Now to the downside on the weekly, if it starts to come back down after FOMC, let's say 25 bips, then very likely it's going to come back down to 3.2 and 3.24. Not really plotting anything below this 20 bips on a day is that I think would be a bit much, but still if it starts to slide down, then 3.25 is what we are watching, but very likely it's going to bounce at 3.32. 3.32 is what we are watching actually right here. There's a second standard deviation on the Heikan Ashi. If that breaches, then we are expecting it to come back down into 3.2. and we are looking for a bounce at 3.16. 3.16 might not be a story for today. Realistically, I think if it starts to come down, 3.32 is what I'm watching. 3.32, 3.31. And if US 10 takes this path to the downside, comes back down into the second standard deviation, obviously the market will run to the upside. And to the upside, if it starts to push here, and very likely, I think it's going to go hit this 3.65 to the upside. And if it does go up to 3.65 to the upside, obviously we'll have SPX to the downside. Very likely we'll see some softness in SPX. Let's go here. Well, this chart is still this chart will still be dominating factor. Yesterday it hit this mean and came back down. The mean reversion is done. Basically, that's what it was looking for, and because this was overbought here, sorry, oversold here, it just made sense for it to bounce and hit the mean and come back. This was just what do you call this? A technical bounce. It hasn't tested the mean in a while, so it just tested the mean and came back down. So again, to the upside, if it starts to push to the upside, the mean will be what we will be looking for a rejection. Again, if that clears, then we're looking for a push all the way up here into 10280. However, if it clears the mean here on the day, this is DXY, after FOMC announcement, if it starts to clear the mean to the upside, then we'll start to reassess the DXY to further upside. Yeah, as of now, this should act as pretty decent resistance. Now let's get into Apple. Apple to the upside, if it starts a push after FOMC, it should clear this number 146, rather 147 to the upside. Then very likely it's going to go hit this number about 148.70, right? So this is where 148.80. Let's round that up at 149. But the number doesn't matter. Wherever the technical would be, wherever these major moving averages would be, that's what we'll be watching, right? Uh, will look for this as a guide, and the MACD here has crossed again to the upside on the week. That's a good thing, but because of FOMC and upcoming earnings, this might not be as trustworthy. However, for SPX to move 3%, this guy has to be a major mover today, right? If Apple doesn't move, let's say it goes hits this number 147 and probably starts to stall there, we might get another 2%, probably 2% day, and probably, yeah, 2 to 2.5% day, and probably SPX will start to stall again. However, if SPX starts to clear this 147, Apple starts to clear this 147 to the upside, start to move into this 149 territory, and very likely we'll see a better than 3% day on SPX. This chart looks pretty exhaustive, and came back down 5 and 8. And good thing is that 8 is moving up, right? 8 was here and now it's here. Today, very likely it's going to move up all the way here into 143. So to the downside, we are looking at Apple 143, a breach of that. It likely will put Apple at 142. If that breaches, Apple will start to come back down into 138. Rather, that would be 138.90, 139. So if Apple takes this back to the downside, then obviously we'll have another 2% to the downside. And if Apple starts to breach this right here, Apple has to hold this. If Apple breaches the 50 to the downside, then very likely it's going to come back down into the mean at about 135.70. And if Apple starts to come back down into the mean, and I don't believe this is a story for today, the mean 135.70 area, I don't believe it's a story for today. But if it does come back down, and we'll have some pretty decent weakness in SPX. I'm watching the 50 moving average. No, this is the 100 moving average on the day for Apple to hold. And if Apple breaches this, then I'm looking for the downside. And this chart, I'll be operating again on this chart. The upside, it is hitting major resistance right here. So very likely we want to see some weakness. And again, this thing work in cycles, right? Oversold conditions, and before that, I think we had some overbought conditions. Right here, it came back down, oversold, hitting a major moving average. Start to push to the upside. MFI got overbought. And in a different scenario, I would probably shorting it to the downside, or at least a push down to the mean, or even right about here. But same story, 5 8. If 8 breaches, then we look for 21 bounce. 21 bounce looks very likely here, about 143.80 area. That breaches will start to reassess. Downside 143.70, and the mean is sitting all the way at 143.40. Nothing major. A good 1 point from where it is right now, or not even a point, about, let's say, from, give or take a point from yesterday's close. So that makes sense. That makes sense. We'll watch that trade. However, if it clears this number right here, 143, 144.40 area, then we'll reassess it up all the way here into 145, 144.90, 145 area. That's another major resistance spot. But if it does clear through FOMC, let's say 25 bips, I think it'll start to run to the upside, and probably 50 bips, it will start to run to the downside. That's my idea right now. Right, and get let's get Microsoft as well. Let's get Microsoft. Microsoft ran pretty hard yesterday. I think this is the thing that propelled SPX to the upside yesterday. And this chart looks pretty decent. Same conditions, just like Apple, the conditions were pretty ripe for it to run. And the same thing happens. Oversold, came back down, overbought, came back down, oversold, pushed up. Now it's again in the overbought territory. Ideally, I would have been, looking forward for a downside. However, FOMC might change that and push it all the way. Let's go here with MSFT chart all the way up here, 254. And FOMC, if I think this one is pretty decent resistance right here, 252. That clears. We're looking forward for 254, 255 area hit for Microsoft, and it makes sense for Microsoft to do that. However, I'll be cautious. I'll be very cautious because these are major moving averages, and these tend to act as pretty decent resistance points, right? So if Apple and Microsoft take this path to the upside and hit respective resistances, then very likely we'll have a 3%. Let's say if this thing Microsoft pushes up and hits this 252 and clears and hits this 255, then we'll easily have, in combination with Apple, we'll have an easy 3 point day on 3% day on SPX. And let's look at Microsoft here as well. This is, yeah, 257, 258. It seems pretty decent. And last time it hit that number, it came back down. And if it clears this number, very likely Microsoft tomorrow will, not tomorrow, but when the Apple earnings come out, if Apple starts to push to the upside, then very likely Microsoft will hit this 260 area again. Not plotting anything above 260 for Microsoft. And I think, in fact, today 258, yeah, I think 258, 259 should be a good, decent resistance spot for that. And to the downside, very likely, if it starts to push to the downside, same story right here should be a decent resistance, 245, then 5, then 8, right about here, 240, 260 area that breaches 239. Not plotting anything sub the mean on the weekly for Microsoft, 239.70 or something like that. If it breaches there, then we'll reassess the situation. And if Microsoft starts to come down to its mean on the week, and obviously we'll have some more weakness in the SPX. Very likely we'll see a 3% down day if Apple and Microsoft starts to come back down to their mean on the week. Right here for Microsoft, this 50 moving average, right about 242, should act as pretty decent support. If that breaches, then we are looking at a 240. Then if that breaches, then we are looking at 237 area. And this mean right here before 237, right about here, 239.90, this area should act as pretty decent support. However, whatever happens with Microsoft, to the upside, 260, and to the downside right about here 224. This is the bigger picture, right? Even if you got caught in a wrong move or in wrong trade, this should act as your guide for an equity trade. But for options trade, it's a different story. The option move for various reasons. But if you watch this trade here, right, hit a major moving average, hit a major moving average, coming back down, and now it looks like it wants to reach up to that thing. And this time around, if it reaches there, very likely it's going to go hit this number as well. So that's what I'm looking for the upside. And to the downside, it's a defined downside, probably right about here, 224 area, 224, 225 area. If that breaches, very likely the third standard deviation on the week is at about 221. So it's in a defined range for equity traders. So pretty. So as long as you have Microsoft and Apple behaving within that range, within that defined range of the lows and the highs, you'll not have SPX making any new lows, perhaps. Yeah, pretty much SPX lows are in for from the last year. And one more chart we want to watch is Tesla. Yesterday we were looking forward for Tesla. I want to open up the upside right here, right? This is the chart we were following oversold conditions. Before that, they were overbought conditions, same thing. Now, if you've noticed a theme here, Apple, Microsoft, and Tesla, same exact charts, right? So now it is overbought. The MFI is clearly overbought here. And if that contributes to the FOMC, then we'll start to see some downside. So very likely, yeah, it hit the resistance. And otherwise, if it were not a FOMC day, I'm probably looking forward for this. Okay, same thing happened. 5, 8, coming down into the base trend, half trend baseline. If that breaches, it's going to come back down here 170, 130 area. If that breaches, very likely it's going to go hit this 170. And if weakness starts to come back in, very likely we'll see this 168, even once 166. Even it's going to come back down into 163. If we'll start to see Apple and Microsoft start to move to the downside, their mean, then very likely Tesla will be the one that will be volatile to the downside. Let's go here with Tesla. Right, Tesla is this number to the upside. 195 is what we're watching. And again, this might happen, this might not happen. But in the case that Tesla goes up and hits this 195, or let's go here if we have anything right here, 182. Right, 182 is the mean for Tesla on the week. So if that clears, then we'll probably look for a push all the way into 187. That clears, then we'll look for 195. However, yeah, this is doable for Tesla very much. 183, 184 is very much doable for Tesla. If that clears, we'll reassess up all the way into 189. And if Apple, Tesla, and Microsoft take this run up, and this looks really nice. I really like this chart. Even if it comes back down here into 154, I still like this chart to the upside. Right. And Tesla's, not just the chart and all that. Tesla's fundamentals are much better compared to last year. Right, and the company has grown 66% in the last year. That's amazing actually. Uh, for a Category 5 company, 66% year-over-year growth. That is incredible. But keeping that aside, the technicals say that to the upside we are looking at the mean 183 to 185 number. That clears. We are looking at a 188 handle on Tesla. That clears, then we'll reassess there into 195. But that's only if it clears 188 here. And to the downside, again, this should act as pretty decent support. 168 area, like it was acting as resistance yesterday. That breaches, very likely is going to come back down here into 157 area. Might not be a story for today. This 155, basically the 5 and 8 on the day. But if this breaches the 200 moving average on the week, then very likely it's going to come back down into this number here. And if a Tesla takes this back to the downside, then a 3% day is solidified on SPX. No questions there. All right. Are we watching anything in particular? Let's see the chat. MSUM, moving, insane and Lord of myself. Do DXY detached from SPY on the hour. Sounds like the bias, FOMC plus earnings, long dated calls. Yes, yes, yes. That's exactly how I am placing my FOMC trade. So basically, the FOMC trade for me is what Ankit is mentioning there. Longer dated calls and shorter dated puts. That's one way to play it. And second way, um, or rather the immediate trade, what I would generally do is go long and short. What does that mean? Buy puts and calls nearly about, let's say, 130-ish, 130-ish, 140-ish, and sell 155, 150-ish, right? So that appreciation, that will the IV will be at the peak around that time between, let's say, 130 to 155. IV would be at its peak, increasing. So that itself will give you another, both sides at least 50%. Last FOMC it gave 100% trades between that 130 to 155, both on calls and puts because of the expansion of IV. So I'm looking at the same thing, and as always, I'll do the same thing. That would be the first trade and exit before the FOMC and leave that trade in place, which is longer dated calls and shorter dated puts. My understanding is that once the FOMC says 25 bips, I think the Fed will say 25 bips, more or less. That's what the market is pricing in. And as and when the 25 bips statement is made, I think the market will shoot to the upside. And then, very likely, when the chair will start to talk, chair will try to be hawkish. And if the market perceives the chair to be as hawkish, then very likely the gains will start to come down. If not, then the 3% will probably turn into 5% if the if the chair is probably anything less than hawkish. Yeah, that's the thing. And there are whole other developments happening around the world, especially in China and Europe. China is something that needs to pay. We need to pay a lot of attention to China right now because seems like there is, as I think Neophi posted that that the whole situation in China. So China, for the past I think few years, they were trying to not spend and shrink their debt. Basically, that or the liquidity. Basically, that's what they were trying to do. But because they ran into trouble with their real estate developers and whatnot, they couldn't do it, and they now are starting to push money into the market again. So that's the and shadow banking is a big problem in China, right? So we gotta be very careful with China. And when you mention China, being careful with China, obviously you got to be careful with Apple, then obviously you got to be careful with Tesla. So it's all connected, but that's a bigger picture, and we'll take a look at things as and when they unfold. For now, for today, this is how we're going to plan. All right, 2 minutes open. Let's get into live trading.